Hi, welcome to the Market Alert for Wednesday, the 31st of August 2022. So, good news batters big tech, Bitcoin, black gold and bonds. Yeah, this is the economic news, the JOLTS job opening that we saw yesterday in consumer spending, which came out a lot higher. So it was good news if it was a bull market without all of the inflation and interest rate tightening. And of course, the market then moved higher, but then it got converted back to bad news. But they're just using the news, however, they want to use it at the moment. But they have managed to hold the markets till late in the evening, which we'll look at in just a moment. US stocks were pressured amid hawkish central bank rhetoric and geopolitical concerns. And stocks and bonds sold after hawkish central banks speak, strong data and Taiwan drone shots. So that's the roundup of the news yesterday. Today's economic news. Let's have a look, see what we've got. We've got French CPI numbers today, and also the European CPI flash as well. ADP 115, that's a precursor to the non-farm payrolls on Friday. And the gold-silver ratio continues to move higher. We're back to this sort of triple top area there. We're off slightly overnight. Let's have a look at the markets for yesterday. They've tried to bounce back for the last couple of days, and let's see what happened yesterday. So in the Dow, we can see that yesterday the market ended up lower. It didn't start off that way, as you can see from the 30-minute chart. We moved up to the upside, and then it just rounded over, and then once the Dow opened, it just accelerated to the downside there. Now we've found some support. Market is retraced to the DP level and the 50-bar moving average. Another bit of a dead cat bounce, I suspect, given the backdrop of how things are starting to fall apart. So in the daily chart there, you can see that prices have retraced back to the 89% retracement there. We are oversold in the daily chart, so a bit of a bounce may be found. Who knows? But the backdrop isn't looking too glamorous at all for the market to bounce. Like I say, yesterday's economic data was far too positive and shows that the tightening isn't really working. I think there was an extra 11 million job openings yesterday, which is quite a significant number. So Powell is going to be thinking, well, maybe 75 basis points isn't enough. I'm going to go for 1%. And eventually they'll slow it all down to the point where it probably collapses. But at the moment, the data is still showing that it's a positive. Would be great if there was no tightening and no inflation. You know, the old days, as it were. You would have seen the market move up 300 or 400 points on the news yesterday, but not now. In the German DAX, also moved up very well yesterday. 62% retracement in the daily chart, then sold off with the Dow. Overnight prices are still sideways, back again 50% retracement. In the 30-minute chart, you can see there we moved up nicely, and then we sold off in the afternoon. I did take advantage of some of the short move and didn't realise that it had moved so far to the downside, to be honest with you, but a missed opportunity. However, prices have retraced overnight, which you can see there. We're up 50% retracement. We're above the DP at the moment, but we're sideways here. And we've got supply, we've got the 200 MA and 62% retracement, which is going to be an interesting area. We're likely to see this situation continue, aren't we? We've got this new pattern where we move the market up in the morning, in the afternoon it moves lower when the cash Dow opens. So be prepared for that. It seems counterintuitive to the backdrop of really bad news, etc. But, you know, since when has the market taken note of any bad news to move prices in the right direction? It's generally is interpreted as good news, because it could have been worse. That's generally the excuse. Well, we know the figures are bad, but they could have been worse. So they moved the market to the upside. 5-minute chart for yesterday. Again, like I say, in the morning, you've got this Monday's close for Germany, the market 200 MA, and then moving higher and then continuing all the way through until we saw mid-morning 1 p.m. when the Dow futures came on board. You can see there that the market then just changed direction. Overnight, though, we've got that rally, as we've seen, back above the DP and sideways at the moment. You'll need to watch the DP and the close on the downside and the 200 MA in the 5-minute chart. In the S&P, we've got the market back at 78-89% retracement. This too, obviously following the Dow, or setting the trend for the Dow, with the sell-off in the afternoon with the hawkish comments, but bouncing again to the DP and the 50 EMA. This area is very important. Break below the DP, we'll see the close and low likely to be tested. We've got the high up here if we continue to the upside before we get another sell-off. In the FTSE, a bit more volatility in this one during yesterday, playing catch-up from Monday's bank holiday. Market at 38% retracement. And in the 30-minute chart, you can see moving up sharply in the morning. The next two, at the next hour, the next two bars were sideways, and then we started to roll over, and then the FTSE following down. Not above the DP, unlike the other markets at the moment in the 30-minute chart, so we're showing a bit of a struggle there. Sideways at the 50 EMA as well. The close and the low, again, in this market, very important. It's overbought at the time of recording as well. Currencies remain sideways, waiting for the non-farm payrolls and also the rate increase, which is coming on the 17th of September. 30-minute yen, very messy yesterday. Market moving up, got an 89% retracement, and we then sold off to the 200 MA with a bit of a bounce to the DP before then getting stuck in the sideways move once more. DP creating a bit of resistance at the moment, as is the 200 MA. In the pound, sideways, as you can see there, and just stuck in a bit of a range. Again, waiting for Bailey's next interest rate rise, which should be next week, I think, isn't it? I'll check and have a look at that. There we see the pound selling off as the dollar once again moved higher, and then a bit of a bounce to the DP level there at the moment. And finally, in the metals, back to 89% retracement. We haven't finished on the downside yet. As I keep pointing out, it's very likely we're going to get a big slam in this. All you need is a big sell-off in the stock market, and they'll ram the price of silver down. It's staggering, isn't it, when you think that everything else is up 300-400%, food up 50%, everything else, and silver is still 80% cheaper than it was in 1979, and it's using all of the solar panels, cars, etc., all of the net zero technology, and here it is at $19. Incredible. $30 cheaper than it was in 1979 and 2011. And in gold, actually, let's look at the 30-minute silver, 1 o'clock fix. There you go. It's just battered the market with the news, and they did. Markets held overnight, but watch the low of 18.32 there. Gold holding quite well, down at 89% retracement from here to here, and also we've gone below the low there as well. So it's important that it holds at the $1,700 level. Yesterday, you can see again slamming the price as the economic data was released, and the dollar moving back up. No great shakes. We didn't go back above 109 yesterday, but it was the news that was used to slam the price of the metals. And finally, in crude oil, this is the October contract. This has expired. I've just realised this, the last trading day yesterday. It was down. It's up slightly on the November one, and I'll add the new contract in tomorrow. I've got a bit of an issue trying to get it into the software for some unknown reason. I think the batteries are low in the keyboard, and it won't let me type the code in to add it. So I'll sort that for tomorrow. But it's up slightly on an increase in supply for yesterday. Okay, that's it for this one. If there is anything else to report today, I'll let you know, but keep an eye on the geopolitical situation, which seems to be impacting the market, and also obviously central bankers out talking about tightening policy. Okay, have a great day. As ever, thanks for watching. See you in the next.